Good afternoon, everybody. Thanks for joining Jeff and myself today for our webinar. And we'll be talking about solving the financial puzzle, top pain points in multi-unit restaurant accounting. It was what we see continuing to be a big topic across the 30-something brands One Data Source supports. Accounting systems, payroll systems, processes continue to take a lot of attention, and we're seeing a lot of changes, whether it's from outsourced accounting to in-house, outsourced to a new outsource, in-house to outsource. It's definitely something that is top of mind for the system and the vertical. And there are many questions about solving those problems. And then even once decisions are made and implementations are complete, there's a lot of retooling questions that probably didn't get answered properly and by the right people during the process. So I think today's webinar, you'll get some really good information and be able to ask some questions of Jeff, who is a partner of the franchise services practice at HORNE, who is one of our key partners across the franchise vertical, QSR and full service restaurants. So just a little bit about One Data Source. We support 30 something brands, about 17,000 restaurants, and we are on the front end in this process, collecting data, aggregating data, coding it to be posted, integrated with banks, credit card processors, really any piece of data that's necessary to run your business. We're collecting it and making it available to you through business intelligence reporting, balanced scorecards, and then obviously supporting your payroll and accounting functions. So I think today will be real timely and relevant to what's going on in the vertical. And Jeff's going to be a great leader here for you to take you through some slides and talk about it. So Jeff, if you want to introduce yourself and then take off.
Yeah, thanks, Bruce. Yeah, my name's Jeff Aucoin. I'm a partner with HORNE. We're a professional services firm. Been around for 60 years. We do a lot of accounting for franchise concepts. We work with over 40 different brands, almost 4,000 units. Obviously, not as many units as you guys, Bruce, but we're digging in, doing the accounting, the payroll, the payables, really all the financial side of things to help owners really focus on operations. We spend a lot of time kind of talking about in-house and outsourcing and co-sourcing. And so today our goal is to cover a lot of the things that an owner and leaders within multi-unit restaurant operators are faced with whenever they're making decisions as it relates to accounting and back office processes. So we'll talk about pain points. We'll talk about some of the areas that you can leverage people outside the organization, ask what questions to ask, what things to do to make sure you're set up for success. So with that, we can jump in to today's financial landscape. All brands are competing for customers. There's a lot of loyalty programs. There's a lot of the third party aggregators and getting involved with having relationships with third parties you wouldn't ordinarily expect. But COVID kind of pushed a lot of that, and we'll continue to see that increasing. So a lot of those things put us in places that make us uncomfortable, but it's the way we have to operate in order to be successful. Technology advancements, there's so many things out there that make our lives easier, but then also make our lives more complicated. A lot of times a brand will make decisions to go in certain directions and you're kind of forced in those areas. And you may not have the ability to control what it looks like on the back end. And, your accounting folks are dealing with some of those things on the back end. And there wasn't a lot of thought put into what happens whenever you have to account for the transactions or reconcile the deposits or all those other things that are necessary to run a business successfully. Regulatory compliance. From the labor standpoint, we're seeing a lot of those areas where you have different state and local governments adding complexity in those areas. which is always going to be a challenge. And, I can only see that increasing and not decreasing in the future. So with that, we can talk about some of the pain points, and, the landscape leads to the pain points. Fragmented financial systems, we see a lot of things that are adding to the complexity here. You have vendors like Restaurant 365 that say they're making things easier. I don't know if that's true. You have other financial accounting vendors that promise the world, but it's not quite that easy. People want you to leverage AI, and AI is not where we want it to be, or where we expect it to be. And it's easy to use that term AI, but there's still a lot of complexities there, and it's not just flipping a switch and then everything gets done in a way that makes our lives easier. Sometimes it makes our lives more complicated. A lot of times you'll go to a trade show for a brand, and there'll be vendors there that talk about how easy things work and how easy they can connect with things. And, it's like the shiny new toy, and you have an owner or a lead or head operator that comes back to the organization and says, "Hey, I saw this, let's make it work." And it doesn't necessarily deliver what was promised from a sales perspective. So, really getting in and doing due diligence on some of those things and understand how it impacts the organization from the back office side is very important. So that's a pain point that we see a lot of. Labor cost management and compliance. Again, labor, it's getting better from the standpoint of hiring folks, but it's still not easy. And then also, we see a lot more pressure from the minimum wage, labor rate expectations from an employee, and it's pushing labor costs higher. So you have to be more efficient with the labor you have. So that's not going away. That's going to continue to be a problem or a challenge. Same thing with compliance. We see some fun new articles related to robotic technology building a pizza. Well, we're still a long way off before we implement something like that across the industry. It's fun to watch, the robot mix your drink at the airport, but it's not where you're going to have that at every corner bar and replace a bartender. I haven't seen a robot that can actually listen to somebody's stories at the bar and relate to them. So it's important to still have those people and focus on those people, and recruiting that talent is going to be a pain point for, a long time. It's not going away. Timely and accurate reporting. We've seen, a brand like Wendy's where they've started requiring monthly period financials to be uploaded. A lot of brands have that requirement. It helps them enhance profitability within the brand. And that accurate is very important, but timely is also important to make sure you're getting those things submitted, but not just from a compliance aspect, but from the aspect of actually making more money for your organization. We have a client who has a 4-day turnaround, and his goal is, period closes on Sunday. His goal is to get financials Thursday afternoon, Friday morning. So he's reviewing his financials for his stores Friday. And then Friday night, he's in stores helping managers change the financial perspective. So he has 4 weekends in that next period to actually change the financial situation. If you get financials delivered in 3 weeks, well, you only have 2 weekends to potentially change that outcome and what the financials look like. So it's very important to have timely financials, and put a lot of weight on that to make sure you're getting things turned around quickly so you can help manage your profitability. Cash flow and margin pressure. We see costs going up every day in different areas. and you're constantly having that margin pressure. A lot of times brands are giving less control to the franchisees to manage their pricing. And so they're kind of stuck with this very small margin that they're working with, and they need to focus on growing sales. So the margins get bigger from a dollar perspective, not necessarily from a percentage perspective, which helps result in cash flow. We are seeing some reduction in interest rates, which can help cash flow, but we've had people that are refinancing their debt, which they're getting a lot of savings on their interest rates, which help from a cash flow perspective, but it's being taken away by some other line item on the P&L that's increasing, sometimes higher than that reduction that they got in their interest rate. Fraud risk and financial controls. This is near and dear to my heart. For years prior to coming into franchise accounting, I focused on fraud and forensics and investigating embezzlement. Huge risk, always will be. People just tend to steal. We have less cash in the stores, but it's still a big risk, and necessary for folks to be watching out for it, because it only helps, to plug up the bottom of that bucket if somebody's stealing from you sooner rather than later and finding it as soon as possible. And sometimes in-house accounting, you have less resources to set up the right controls, and that's something we'll touch on in a minute. So let's talk about accounting processes. So this slide is really just intended to kind of show an example of all the different things you're dealing with on the back office side from an accounting perspective. And, if you're doing things in-house, all the complexities that come with this. You probably have outsourced income tax to some other professional that helps with the preparation of returns. There are some in-house accounting shops that will do income tax preparation, but a lot of times that's a natural thing to outsource. So that's an area where we, help a lot of franchisees even when they're doing their in-house accounting, and it really does mean a lot to have a professional outside the organization who sees things and can recommend things because they have their pulse on the environment with all the different things that are changing. And we have been seeing a lot of things changing in Washington that are going to impact 2025 and future tax years. The support area is maybe not where, that you may not be spending a lot of time in that area because you're working on the operation side, which are some of those other buckets. That support area is really where you can provide high level, high value consulting in your organization if you're doing in-house accounting. So it's very important to, kind of stick your head up every once in a while from the monthly and period financials and closing the books and processing, and do some of those higher level things for ownership and leaders within the organization because they will value that. And I don't want to say more than the accounting because there's some people that value accounting a lot, but they will spend more time, and dollars on your department if you're able to provide some of those higher level support areas like cash flow analysis, budget and forecasting, benchmarking. There's some brands that'll provide some benchmarking, but you really have to dig in to compare your stores to that benchmarking to really understand where you're headed and what opportunities you have to make more money. So I'm not going to spend time on all those different areas. Payroll is a big one, but state and local tax, we've seen a lot of complexities come in here with the third-party delivery aggregators. Those folks, have some requirements from a compliance standpoint, and it varies by state. It varies by locale and municipal taxing jurisdictions. So we've had clients who have overpaid sales tax because they did not take into consideration the third party sales tax that was remitted on their behalf. that's a huge thing if you're not considering that or don't understand how that impacts your state and local taxes as it relates to your sales. Very, very important to spend time in that area because you could be overpaying taxes. And, there are ways to get some of those taxes back, but you may open yourself up to a sales tax audit. So, really understanding that and spending time in that area is very important. And then on the payroll side, just want to point out the WOTC. You really have to have a onboarding platform or a vendor who is helping in that area to harness the work opportunity tax credit, which can be several thousand per store. It'll never show up on your P&L, but it's a tax credit that shows up on the tax returns at a later date. But very, very important to harness. One other thing, 1099. That's used to be a $600 threshold. It's moving to $2,000 based on the big, beautiful bill act that was passed a little while ago. So that threshold is going to be going up, which is probably a good thing for all of us. But still, 1099 is important, and you don't want to get caught not filing those. So next slide. This is a slide where we could spend a lot of time, but you know, with every strength, there's a weakness, and this kind of shows that. So in-house versus outsourced. I've put 4 buckets here: personnel, skill, controls, and technology. And so on the left-hand side, you have in-house accounting and some of those benefits there. And then outsourced, you have some of the benefits of outsource. So it's kind of like I tried to make it where it was a seesaw where one side is, a benefit. Well, both sides are really the benefit. So essentially the adverse would be a weakness. So personnel, direct oversight, full-time employees. You were able to manage the day-to-day tasks of your team. You're able to turn those around, get them to turn things around quickly. You can reprioritize what they're working on. And outsourced, it's a fully managed team. So somebody else is managing that team, takes those headaches away. You don't have any in office struggles with, this person at the coffee pot, complaining about another person. You also have scalable staff. So it's easier to scale if you were to buy 10 new locations tomorrow. You don't have to worry about the strain that it puts on your team. So that's another benefit of outsource. But again, you have the in-house side where you have full-time employees and you can count on them day to day. Skill. So in-house, you have skill retention and institutional knowledge. So that knowledge and experience that they're gaining, they get to keep it. And it's within your organization, which is a very positive thing. If you outsource, you have access to expertise when needed. So you can leverage, different expertise in different areas. For example, like the sales tax knowledge from a third party aggregator perspective, if you have somebody and you're in an outsourced world, they're able to lean on other people with that expertise to bring that to the team without hiring a full-time person in that area. And then you also have market and brand perspective. We do work for almost 4,000 locations, 40 different brands. We, in Domino's, we do almost 40% of the domestic stores that are franchisee owned. Very large group of our work, but we are also able to advise those franchisees in a way that a franchisee that does their books in-house, they can't have that knowledge because they just don't have that perspective across that broad range of stores. Controls, whenever you're dealing with an in-house team, which, I've worked with a lot of different entities and companies and over the years related to setting up segregation of duties and things like that. You have to cross-train your people. And then also it's very difficult to kind of segregate those duties if you have a smaller team. If you have, say, 3 people, it's hard to have somebody that has the ability to write checks and another person reconciling the bank account, etc. And then having the flexible governance, you're able to have stronger controls at various points in time, and you're able to flex, when you need to. If an owner comes in and says, I need to do this, you're able to do that. Whereas if you have an outsourced team, you have independent oversight. So there's somebody outside the organization, and then there's standardized best practices that they're following, and they're recommending things like, we need a W-9 for this new vendor before we make this payment. And, we're not going to make the payment until we get this W-9. And then that way we have the ability to issue the 1099. It's frustrating at times, but, it's oftentimes not passed by our team. We make sure we get that W-9 because that 1099 is so important. It's very easy to say, well, we don't need that now. We'll get it later. Well, then after you pay them, it's very difficult to get that W-9 filled out. Technology, direct access to systems, tailored system configurations. You're able to really make those technology solutions part of your organization and fit your practices. Whereas outsourced, we have access to evolving technology. We're always evaluating new things and seeing what works, what doesn't work, and not implementing the things that don't work. And then we also leverage buying power. So we're not having to spend top dollar on all these different things because we're doing things across a much larger client base. And so the buying power comes and we're able to pass that on to our clients in the way of, our fees, but we're not billing all these different technology solutions and the different fees associated with that. Technology is getting more and more expensive. We talk about automation, we talk about technology. I remember back, 10 years ago, it was like, well, we're going to have all this technology, everything's going to be cheaper. The technology folks have figured out how to charge what it would take for a human to do it so they can make the most money on the technology side, and not just give that away. So it's really just a trade-off sometimes between the manual labor and the technology solution to automate things. So opportunities, despite all of these pain points and the things that we face on a day-to-day basis, our clients want to grow. Our clients see the opportunity of the future to grow and make more money. So it's not discouraging our franchisees in making decisions to build and or purchase new stores. It's almost every opportunity they're looking at to grow. So the opportunities are going to be there to harness, to make more money, to grow and create that longevity within brands. Um, at so we, as the accounting folks in the back office side of things, are going to have to figure out how to get things done, despite our owners still saying it might be difficult for you to do all these things, but we're still growing and we're still going to make more money because that opportunity is still there. So I don't know if that's discouraging or if it kind of creates job security for all of us. So it doesn't make our lives having difficult things and having challenges creates opportunities for all of us. So we want to make sure we support those in the areas where they want to grow and make more money. So next slide. So investing in cloud-based accounting platforms, there's a lot of the accounting programs that are moving to the cloud-based side of things. Picking the right one can be challenging if you're still using a accounting platform that's, on a desktop. You're gonna have to move at some point. All the accounting technology companies are moving to that cloud base, and you really want to get there sooner rather than later. And when you're making that choice, spend the time and talk to the right people to really understand what risks are out there and what opportunities are out there, so you can make sure you harness the right one. It can be difficult, but it's worth doing. Integrated tech stacks, folks like One Data, they're pulling data from a lot of different places, putting it in one location. Very, very important. A lot of things are coming down from brands that are changing the tech solutions that are in the stores. But on the back office side, they don't give a lot of guidance there. You're kind of stuck with the things that they make decisions that are feeding into the accounting system. So you have to find a flexible accounting system and tech stack that works on the back end, to make sure you're able to be flexible as things change. Automated compliance tools as it relates to payroll. There's a variety of things here, schedulers, and other things that happen within brands that you have to be on top of and understand how it affects the back office. This final bullet point is knowledge sharing. A lot of business owners, if you get anything out of this presentation, this is what I want you to get out of it. A lot of business owners have relationships with professionals like attorneys. So when you have something that happens, you know who to call. Most of the time, in-house accounting folks, and or people that are responsible for the accounting, even if it's outsourced, really don't have a professional that they call on to bounce ideas off of. It could be a peer in another organization. It could be another professional like your tax preparer who you call. You really, really, really need to have a close-knit group of accounting professionals that you can lean on when you have a question related to any of the things that you're dealing with, because knowledge sharing is going to be the way that you can overcome a lot of these obstacles, a lot of these pain points. And HORNE, you had my email address at the beginning of the presentation. We want to be that type of person. I'll give you an example. We had a client who had in-house accounting. They had 120 locations. The owner I met at a conference, spent a lot of time talking to her. She was looking at buying some new stores, and her accounting team told her, no, we can't take any more stores. We can't process any more payroll. We can't keep up with what we have. If you buy those stores, we're not going to be able to do our jobs. We're going to, essentially collapse. And I told her, I was like, well, when you buy these stores, are they in a different state? Are you, going to put them in a different entity? And she answered yes to both of those, because I knew it was her practice. As she bought new stores in different states, she put them in a different entity. And I said, well, HORNE can do those stores. We could do the accounting, we could do the payables, we could do the sales tax, we could do the payroll for that company for those new stores. And then whenever your accounting team's ready, then we can just hand it over to them, and we can give it to them, and then they can take it over when they're ready. And we did the accounting and all the other services for those stores for about a year and a half. And it was the perfect solution for them. They, took the stores over, copied over all the data, because they were actually using Intact, the accounting software that we used. We kind of talked about that as we were progressing and they were implementing a new accounting solution. So we helped them kind of set up some of their accounts so it would transfer over and they were able to map all the accounting. It was a perfect solution for them and it worked, and it was a success story. And now we have a good relationship with them. Well, we had a good relationship with them before, but we kind of have that same relationship with the knowledge sharing, because as a brand, Domino's is doing different things, and it's important to share how we're doing things for our clients versus how they're doing things, because they don't really have anybody to bounce ideas off of. So that's something important. So if you take anything from this call, knowledge sharing, have somebody like HORNE so you can reach out to and talk about and bounce ideas off of. It's really, really important to not, just kind of stay in your shell and kind of do the things that you're doing on a day-to-day basis without popping your head up every once in a while and figuring out what other people are doing. Because that's the only way you're going to get better. That's the only way you're going to keep improving. And a lot of times, the only way you're going to overcome some of these challenges, and God forbid, there's a challenge you don't see coming and that hits you or you didn't know about, like that third party aggregator and the sales tax people were paying, and they didn't have to be paying. And it was hundreds of thousands of dollars for several people we spoke to. And so that's an important thing and can really change your business in the snap of a finger. So with that, that's all I have. Hopefully we can have some questions. Happy to answer and hang around for a bit.
Hey, Jeff, thanks a lot. Yeah, so actually, I've got some questions here, and I'm going to relay them to you, not in the order they came in, but they actually um, track pretty nicely through a dialogue, so I'm going to kind of reorder them as they kind of lead one to the next. So the first question, can you break down cost comparison that we should consider between in-house and outsourced accounting?
So a lot of times, people will look at the personnel, and that's what they want to compare to the potential price to outsource. But there's probably other things that need to be considered: technology, payroll solutions, the management side of things, the ability to focus on other areas of the business if it's an owner who's doing some of that. I've had the situation where the franchisee and his wife were the ones were doing the work, or the wife was running the business and the husband was doing the accounting, and they would go on vacation, and one of them was stuck doing payroll in the middle of vacation because it was payroll week. And there's a price for that. You can't really quantify the dollars to that, but there is a price associated with that flexibility and being able to go on vacation without having to worry about some of those things. So there's a lot to it, and I think it needs to be broken down into several pieces. So it's difficult to say, these five things, but there's a lot of things that have to be considered and thought about. And, making sure you understand, if you get a quote for outsourcing, understand what's included in that price from the technology side, from the payroll side, because sometimes we've seen it where, you go and you outsource your accounting, and then you get a separate bill from another vendor for payroll or something like that. And it's like, well, I didn't even know that was even coming. I thought all this was included in the price. And that's kind of how we set it up. That's how we try to set it up for our clients, is kind of one price, and you're getting all these things, and we define what they're getting with that price. So
Great, thanks, Jeff. And so the kind of follow-on question then is, if we decide to outsource, what would typical ramp up time be? So an implementation kind of general guideline.
um so a lot of time, well, so we have our standard is 75 days to 60 days to get some of the things necessary for us to set up payroll and some of the other areas, because we have processes that we have to follow. But there's times where, I mean, we got a client about a month ago who had not had financials done since like September of last year. So as you can imagine, we prioritize payroll number one. If we have 60 days, we can get somebody onboarded for payroll. That's, you're paying your employees 2 weeks after that onboarding. AP is critical, paying vendors. Financials follow. We want to get financials on a regular schedule, but those could take longer if the books haven't been done for 9 months, because you have to catch all that up to make sure you're able to, have accurate financials. But oftentimes, if we have 60 days and we have an agreement in place, we can get most people set up and going in 60 days. But most people that have in-house accounting, they will contact. I mean, somebody contacted me because he does the books for 22 stores, and he's got several staff, and he plans to retire middle of next year. So he reached out to me about what that looks like, and to start that conversation so he can give the information to the owner almost a year in advance to make sure there's no surprises. So that's another example where people usually plan way ahead of time. But we have people that'll come to us, and we got 30 days and we're setting up things, and we're speeding through the process. It's easier when it's a new purchase. So if somebody's buying new stores and putting them in a new entity, that's easier than if it's got the history associated with it. So
Good, thanks. Yeah, so the next question then, what are the most common challenges that companies face when transitioning from in-house to outsource accounting?
probably the biggest one is the personnel side. If there are personnel, in the organization that work in the accounting group, going to either be retiring or moving to another position or, being let go. So a lot of times organizations, when you have your back office, it's like family. So that's usually the toughest decision is the personnel side of things. That's a difficult time. That's difficult. Is whenever you have to make those decisions. But a lot of times it's somebody retiring. Like that's what triggers this desire to consider outsourced accounting.
Good. And the question from me, you mentioned AI early in the conversation, and it's a topic that we get asked about, quite often as well. And would love to hear from the accounting side, what is it that people are expecting AI to do to make accounting processes better, faster, probably less expensive? From your perspective, what is it that you're hearing that people want out of AI? And for an organization like HORNE, where could AI be valuable?
So we have a client who constantly challenges us and he uses the term best back office. So he wants to use AI to have the best back office. Um, and it's great if AI could do some of the things that, you snap your fingers, the bank's reconciled, the sales journals posted, all the other things that come along with doing the accounting. But most owners or operators don't really care how the sausage is made. They just want the sausage made. So I read into it more of how do I use my financials to make more money? So how do I take my financials that are for 50 stores and break it down to see what my biggest opportunities are so I can prioritize my supervisor's focus to spend the time where they need to go and focus on food or labor or whatever those things are, or going through and seeing where there's two garbage bills or, because we've had it where there's times where there's a utility being paid for a store and it's actually supposed to be included in rent, so how do you find those things and isolate them and take care of them? That's how I see people wanting to use AI, but it's not there. I mean, we're as a firm implementing Copilot and some other tools, and we're going to be figuring out ways to use it and enhance the services we provide. But it's not as intuitive as you want it to be. It's still got a long way to go, and it could be there in 6 months. I don't know, but because it's moving very fast, but it's not there yet.
Yeah, it's definitely something I think everybody in the restaurant world will have to embrace, and probably not in a terribly long time. But realizing, where there can be immediate values. In our company, we talk about those like internal facing values as kind of horizontal AI, where vertical AI would be something we would implement that would be, a module we would sell, or, some kind of customer facing value. And so it's really interesting. And what I've found in the proof of concept and some things we've done with AI recently is, there's a lot of data that can be exposed in any applications, reporting. But what's really becoming the most valuable is identifying correlations that you wouldn't just normally see. And, in one exercise we did recently, with a large section of data from a major national brand, we looked at just forecasting accuracy, sales forecasting. And in looking at the sales forecasting, we came up with a lot of general data. But the really interesting thing was that we found through searching for correlations that wouldn't be normally found in just general reporting data, is that stores managers that forecast their sales the most accurately and therefore build the most accurate schedules actually have lower turnover in their employee base than stores with inaccurate forecasting. So the correlations and how one piece of operational activity affects other pieces, I think from our side is where there's going to be a real value in AI. And then around customer behaviors, loyalty programs may or may not be delivering what brands expect
Right.
them to. And we see where, some brands aren't even using their data to understand why that is. And so, loyalty program may be, every transaction that's generated through the loyalty program may be a much higher check average, but it might be only 5% of your customers that ever use the loyalty. And our customers aren't realizing that. We're talking to them about this data that we're finding. So
Yeah,
I agree,
loyalty.
it's not ready for prime time, but I think it's going to come around pretty quick.
Yeah, loyalty programs are interesting because it's like, when the internet was coming around, everybody needed a website. And then as the smartphones came around, everybody needed an app. And it was we just need an app. I don't care what it does, we just need an app. And so that's kind of where we are with the loyalty programs. But I'm sure as brands figure it out, they'll get better at it. But Domino's still sends me 8 emails a week, and none of them drive me to order a pizza. It's just whenever I'm ready for a pizza is when I go order it. I don't do it based on these 8 emails that I get that are essentially spam now.
Yeah.
And Domino's is pretty on top of their data, but they're not using it right either.
Yeah, it's a tough restaurants. Yeah, there's so much to manage.
Yep.
It's nice if you could only focus on accounting or payroll, but most operators don't have that luxury. Hey, one last question, actually pretty insightful. Accounting programs in colleges and universities are at the lowest enrollments
Hmm.
in decades. How do you foresee that affecting outsource versus in-house accounting?
Whew, that's a great question. My daughter's actually getting her master's in accounting at LSU, following in my footsteps, and I was the last person to find out when she made that decision to go into accounting. But yeah, enrollment is down. People don't want to do the nuts and bolts accounting like we do. And people, on this call who, if you have in-house accounting, the folks in your group do. They want to go and they want to audit, or they want to do tax work, or they want to do consulting. They don't want to do the traditional bookkeeping. And that's been a problem or a challenge for a long time for us. And that's where we have um, hired people from banks that don't necessarily have college degrees, but they have that financial knowledge. And, you do have to do debits and credits when you're a teller. And we'll train them to, come in and do the accounting. But in-house accounting, it's got to be hard hiring people and training them, because the learning curve could be 4 to 5 months to train somebody to sit in a seat to be meaningful value to an organization. And if somebody quits, you may only have 2 weeks notice, or somebody retires, you may only have a month's notice. And so to hire somebody to sit in that person's seat is not that easy. So it's a little easier for us on the outsource side because we have more resources to pull from and more time to get somebody trained up. But from an in-house standpoint, I can only imagine that's a very difficult challenge. And I would recommend having some relationship with a personnel service to be able to pull people in as they need them, if that's an option for somebody to have some. But you may pay 2 or 3 times what you would ordinarily pay for that type of service, to get that work done.
Right, right.
So I don't
Well,
have a solution for it.
yeah. Well, it's good to see family continuing in the legacy.
Yeah, yeah, I'm excited.
And LSU, I hear Nick Saban's coming to LSU. So
Well, I'm not holding my breath, but thank God he did come to LSU, because we wouldn't have ever got out of the ditch, I don't think.
yeah. Well, we're right up against the end of the time, so really appreciate everybody who joined us today. Thank you. We'll have the recording available, materials available. If you had to drop off earlier or somebody was registered but didn't join, and of course everybody that was here can get the materials as well. So thanks a lot, Jeff. Great talking with you, and enjoy the relationship with HORNE, and excited to keep that growing together. So anybody, reach out to Jeff or I if you have any questions or comments. And just thank you for making some time for us today. Thanks, Jeff.
All right. Yep. Thanks, Bruce.
All right, we'll see you.
Bye.
Bye.
All right, that's all, folks.
Thank you, Jeff.
All right, thanks, Michael.
Bye now.
Bye.